Taxation of digital transactions, illustrations and test your knowledge. Illustration 1. Compute income tax payable by Abhinav, age 32. Interest on fixed deposits with SBI gross 1,10,000. Interest on savings bank with SBI is 15,000. Consideration received for transfer of VDA is 62,000. Cost of acquisition 21,000. Expenses on transfer of VDA is 1,000. Mr. Abhinav has exercised the option to shift out of section 115 BSc, which is the old tax regime. Solution: total income excluding VDA is below basic exemption limit. Hence, tax on interest on fixed deposits is nil and interest on savings bank is also nil. Consideration received on transfer of VDA minus cost of acquisition, tax calculated at 30% flat plus 4% health and education cess. Expenses on transfer of VDA not allowed as deduction. Section 194S, TDS on VDA at 1% of consideration, which is 62,000 into 1%, which gives rupees 620. Tax at 10% under section 194A deducted by SBI, which is 1,10,000 into 10% gives 11,000. Net tax payable 12,792 minus TDS on section 194S and TDS on section 194A, which gives net tax payable of 1172. Illustration 2. Compute income tax payable by Mr. Siddhant, age 24 years. Salary is computed 8,40,000. Interest on savings with Axis Bank 12,000. Consideration received on transfer of VDA to Mr. Harsh 50,000. VDA transfer cost of acquisition. VDA cost of acquisition is 5,000. Monthly salary of 50,000. Also has interest on savings with Bank of India. New tax regime. Ignore TDS on income other than VDA. Solution: tax payable by Mr. Siddhant under for assessment year 25-26. Particulars: total income excluding VDA 8,40,000 plus 12,000, which gives 8,52,000. Income of VDA consideration minus cost of acquisition gives 45,000. This is the total income. Tax on income other than VDA up to 3 lakhs nil, 3 to 7 5%, 3 lakhs to 7 lakhs 5%, 7 lakhs to 8 lakh 52 10%. Tax on VDA at 30%, which is 45,000 into 30%, which gives 13,500. Add health and education cess at 4%. Less TDS under section 194S. TDS on section 194S is nil since Mr. Harsh is a specified person who is an individual, has no PGBP income and consideration is less than 50,000. Net tax payable 50,648. Net tax payable rounded off 50,650. Illustration 3. Compute income tax payable by Mr. Raj, age 32. Business loss 3,18,000. Interest on fixed deposit with HDFC Bank 18,000. Consideration received on transfer of VDA is 4,20,000. Cost of acquisition of VDA is 20,000. Solution: business loss of 3,18,000 can be set off against interest of 18,000 from fixed deposits. Business loss cannot be set off against income from transfer of VDA. Balance business loss carried forward to assessment year 26-27. Tax on income from VDA would be 1,24,800, which is 30 plus 4%, which gives 31.2% of tax. Section 194S, TDS is equal to 1% of consideration, which is 4,20,000 into 1% gives 4,200. Net tax payable 1,24,000, this amount, minus TDS 4,200, which is net tax payable. This is a separate point. Section 194S prevails over 194O. Now coming to test knowledge questions. Question 1. 4 reasons for difference between e-commerce transactions and traditional business transactions causing difficulty to tax the income of e-commerce transactions. Answer. Core reason: absence of national boundaries, no requirement of physical presence of goods, no requirement of physical delivery, E-commerce transactions are completed in cyberspace, thereby causing difficulty in implementing source rule taxation. Second question. E-commerce transactions replaced traditional international transactions. Discuss taxation issues. Answer. Difficulty in characterizing the nature of payment and establishing a nexus or link between taxable transaction activity and a taxing jurisdiction. The difficulty of locating the transaction activity, identifying the taxpayer for income tax purpose. ABC Limited, an Indian company carrying on business of teak wood furniture under the brand name Purewood. For online advertisement, it utilized services of PQR Incorporation, a London-based company. ABC Limited paid 5 lakhs to PQR Inc. Discuss tax implications, TDS implications in the hands of ABC Limited and PQR Inc. Where PQR Inc. has no permanent establishment and PQR Inc. has permanent establishment. Solution. Finance Act 2016 provides equalization levy of 6%. Where PQR Inc. has no PE in India, equalization levy at 6% on rupees 5 lakhs received by non-resident having no PE in India from a resident in India carrying business or profession. ABC Limited deduct equalization levy of rupees 30,000 at 6% of 5 lakhs. Non-deduction of equalization levy attract disallowance under section 40A IB. 100% of amount paid shall be disallowed. Since equalization levy is attracted, rupees 5 lakhs exempt from income tax by virtue of section 1050 of Income Tax Act 1961. The next point, where PQR has permanent establishment in India. Equalization levy is not attracted since non-resident has PE in India. ABC Limited not required to deduct equalization levy on rupees 5 lakhs. Since equalization levy is not attracted, exemption under section 1050 is not available. TDS under section 195 is applicable if TDS is not deducted, 100% disallowed under section 40A IB. Now coming to fourth question. MNO Inc. is a non-resident belong to country A. To increase share in Indian market, it utilized online advertisement services of PQR Inc., a country Y based company. MNO Inc. paid rupees 5 lakhs to PQR Inc. Discuss tax implications in the hands of MNO Inc. If both MNO Inc. and PQR Inc. have no permanent establishment in India. And the second part of the question is MNO Inc. having permanent establishment and PQR Inc. not having any permanent establishment. Solution. Finance Act 2016 equalization levy provides equalization levy of 6% on consideration of specified services like online advertisement, provision for digital advertisement space or any other service notified by central government provided by non-resident not having PE in India to any resident or non-resident having PE in India. Equalization levy is not applicable where non-resident is having a PE in India. Aggregate consideration is less than or equal to rupees 1 lakh. Specified service is not for business or profession. First answer to first part of question, where MNO and PQR not having PE in India. Equalization levy is not attracted in this case. Second part of question, where MNO has PE in India and PQR Inc. does not have a PE in India. MNO deduct equalization levy of 30,000 at 6% of rupees 5 lakhs. Services provided by PQR Inc., a non-resident not having PE in India. Non-deduction would attract 100% disallowance under section 40A IB. Since equalization levy is attracted, rupees 5 lakhs is exempt from Income Tax Act under section 1050 of Income Tax Act. This is a special point. However, when PQR INC has a PE, being a non-resident, advertisement income would be deemed to accrue or arise in India and taxable in the hands